Roper Technologies is a business that generates over half of its revenue through application software, another quarter percentage of its revenue through technology-enabled products, and another quarter percent through network software. So investors are curious about this business, and I'm going to answer whether or not I think this business is a buy at current market prices. But before I do that, I'm going to evaluate the company's risks, its major risks that it faces, and I'll share with you my proprietary discounted cash flow valuation for Roper Technologies to let you know what I think this business is worth today. I'll also evaluate the business on a forward price to earnings ratio, and then look at their margins, the operating profit margin and the free cash flow margin, bring it all together and answer whether or not I think the stock is a buy at the current market price.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
And so the first risk I'm going to highlight is macroeconomic sensitivity and then a slowdown in enterprise spending. The economic uncertainty that we're entering is higher than usual. We last saw this kind of a slowdown in late 2022. Given President Donald Trump's tariffs that he placed on countries trading with the United States, businesses have turned more cautious. Businesses are preparing for a slowdown in consumer spending, and they're cutting costs wherever they can. And so one of the areas they might cut costs is in application software and network software. They can see this as an area of discretionary spending that they can pull back on to try and save costs amid this economic turmoil. The other risk I'm going to highlight is regulatory and compliance risk in government contracts. The Department of Defense heightened scrutiny on government contractors is a challenge for Roper, and especially because government spending has slowed down considerably. Remember, one of the initiatives that President Donald Trump wanted to initiate this year was a slowdown or a cut of government spending. And we already seen many government contracts get slashed with President Donald Trump and the partnership with Department of the Government Efficiency, which was led by Elon Musk. They went around cutting as many contracts as they can. And so there's been a slowdown in new government contracts, and that could be a risk for Roper Technologies. And lastly, cybersecurity and data privacy concerns. Any security breaches could harm Roper's reputation, which will lead to legal claims and result in significant litigation costs. But worse than that, the company's reputational loss. Because it's an application software and a network software company, a data breach and privacy concerns is more than usual for businesses that are publicly traded. And so this is something that investors will constantly have to monitor. Thankfully, there haven't been any major incidents with Roper Technologies, and so investors don't have to fear a company with recurring habitual data breaches and security concerns. So now that we looked at the major risks that it's facing, let's check out my discounted cash flow valuation for Roper Technologies. By the way, channel members have access to dozens and dozens of step-by-step calculations of these discounted cash flow models. If you're interested, join as a channel member. Less than $5 a month. It's a great value. But in this video, I'm just going to look at the outcome. And the intrinsic value per share I calculated for Roper is $550. The current market price is $566. So I apply a margin of safety between 5 and 10%, and this is well within that range. So I can say Roper Technology stock is fairly valued according to my discounted cash flow valuation. I also like to look at valuation on a forward price to earnings basis, and my preferred data source is finchat.io. I have a link in the description for a discount. The forward PE for Roper Technologies is 27.84, which is on the lower end of where this stock has traded for going back to January of 2024. You can see that big decrease in valuation in April of this year. The valuation fell from around 30 down to 26, and that was a result of all of those major cuts in government contracts. The cost-cutting initiatives led investors to say, you know what, maybe we're less optimistic. about Roper Technologies compared to where we were before the election of President Donald Trump. And I also wanted to look at the margins. I want to look at the operating profit margin and the free cash flow margin, which are both excellent. The free cash flow margin for Roper Technologies is 32%, which is among the best, on the higher end of free cash flow margins of all of the businesses I evaluate. And the operating profit margin of 28.2% is also really strong. It's not in the higher end of all the companies that I follow, but it's definitely not on the lower end. It's in the good tier. It's in the good to excellent tier. A little bit troubling for the operating margin is that it's been flat for the previous decade. We haven't seen growth here. It was 28.9%. Now it's 28.2%. So it's flat. I like to see a business as it learns to operate more effectively to expand its operating profit margin. And that's something that's not as desirable, the number for Roper Technologies. But the good thing is that Roper Technologies is not trading at like a super premium valuation. And so I don't have to be too picky with its free cash flows, its operating margins, its revenue growth, its competitive pressure and risks, right? When I'm looking at a business that's trading at a forward PE of 100 or 125, then I look for everything to be just right. When I'm looking at a business like Roper Technologies that's trading at a forward PE of under 30, it can have some undesirable traits or some things that are not excellent and still make a good investment because the valuation is not selling at a super premium price. All right. So, with all that being said, do I think Roper Technology stock is a buy at the current market price? I think so. And so, I have the stock rated as a buy after evaluating its risks and looking at the valuation. I think the stock makes sense for long term investors at the current market price. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.